What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our markets closing live stream here, as Nvidia is going to be reporting earnings very soon. We've got the markets closing in about 10 minutes, and Nvidia most likely about to report 20 minutes after the markets close here at around 4:15, 4:20 p.m. Eastern, around that time. So thank you so much for joining. It's been a very hectic last 5-7 days for me, as I have traveled a lot. I've covered a lot of miles in multiple different time zones, and I'm finally back trying to adjust to the time zone once again. I was sleeping as soon as I landed. Literally just came home and was so tired, so exhausted, because of course right now it's 5 a.m. 5 in the morning in Sydney. So if you guys can see me and hear me, just give me a thumbs up. Just want to make sure that the audio and the video is good. And again, make sure that you participate in the poll for what you expect from Nvidia earnings here. This is going to be where the stock is trading. Of course, it's been all over the place. It sold off from 183 down to as low as 178. So there was a over 2% sell-off. And of course, a very quick recovery, pushing back to over 182. And of course, we're right now just about flat here, waiting for the earnings as well. The earnings expectations, as I've already went over, and I actually did a 2-minute quick update from the bathroom of my plane. Quite literally was in the restroom inside the plane of the Airbus A380 from Sydney to Dubai. It was a very long flight. I still managed to get that video out to everybody on Discord right after the markets closed, but of course I was trying to upload it on YouTube, but it just did not work. The Wi-Fi was not as great as I thought it was going to be, but nonetheless, I still got it out to all the members. So hopefully that was helpful. Hopefully that you got a little bit of insight on what, of course, to expect. But $1.08 in earnings per share, and then revenue expected at just over $46 billion for the company as well. If you take a look at what that's going to look like in terms of the growth rate, if you come back to the earnings reported for the period ending in July 2024, which is what this is also going to be. This is the second quarter for Nvidia usually. EPS was reported on 64 cents. And then so now we're looking at around a 50% growth in earnings per share on a year-over-year basis. And 30 billion going up to as much as 46 billion is also going to be about a 55% growth rate for the company. So both revenue and EPS expected to increase by over 50%. As guidance, of course, is going to be very important with the robotics chip, China revenue, autonomous driving, autonomous vehicles, Blackwell, the demand, all of those factors very important for Nvidia that we're all waiting to hear from Jensen Huang. So thank you so much for joining, everyone. John, Mike, how are you hanging in, buddy? Get a nap? Yes, I did get a nap a little bit here before I went live right now. But yeah, still pretty exhausted, absolutely, crushed with the long haul flights here. I'm really thinking about kind of spacing them out a little bit, so spending some time on my way to my final destination. So basically spacing it out in a way that I spend some time somewhere, get adjusted to the time zone, and then I move across. But having a 14-hour flight, changing over 7 to 8 time zone is not easy. It's definitely not easy. And I like to nerd out a little bit on these things, and so I was looking at, okay, what's the correct science-backed formula for how many days it takes you to get adjusted to a new time zone? And so I figured out after asking ChatGPT is that if you're flying west, so if you're westbound, you've got to take the number of time zones that you cross and divide that number by 1.5 to actually get the number of days it's going to take for your body to get back into the circadian rhythm of that time zone. If you're flying east, then you take that number of time zones you're crossing over, divide that by 1, and that is a number of days it takes to get adjusted to the new time zone. And so, in other words, Sydney to Dubai, it's going to take me 4 days to get adjusted to the new time zone, because I'm traveling back 6 time zones. So yeah, it's been crazy. Can you please cover HIMS? Do you think when it may rebound, any ideas? Yes, let me just quickly take a look at HIMS for you, because that is also one of my positions that I'm currently down on. So this is the entire portfolio right now. As you can see that, of course, Nvidia, I did end up rolling out my call, the 175 call, which was expiring this Friday, August 29th, out to 180. So that's going to be a little bit higher, $5 extra in strike, and then also moving it out to September 2nd. So actually September 27th at the end of this next month. So that's where I ended up rolling it out to. But this, of course, is the open PNL, just sitting shy of about $96,000. Of course, for the day, slightly down, thanks to Hims and Hers, thanks to SoFi as well, which is struggling here on the day. But Hims and Hers, we've got our decent support around 41 bucks, and resistance all the way up to $52. It is pretty oversold, so we're coming down to some pretty oversold readings here on the RSI, MACD, and the L3 banker oscillator. So I do believe that Hims and Hers does have potential for a little bit of rebound, getting back up to 51, 52. But even if it does end up selling off further, I think it's going to make for some very good price points to accumulate more in the low 20s, mid to low 20s, and it's actually going to be added onto our shopping list along with Oscar and a few other stocks that I'm analyzing right now that are going to be brand new additions to the shopping list as well. So 31 stocks have already been released with their fair values and buy targets. There's 6-7 new stocks that I'm going to be adding, and Hims and Hers and Oscar are going to be 2 that are going to be part of that list as well. Okay, David says, I always thought it was 1 day for every hour. Yeah, so I mean, it depends, because it's worse when you're flying west, is what I've experienced and learned. It's usually a lot easier when you're flying east. So that's why I think, actually, it might be worse when you're flying east. That's why you've got to divide that by 1. And so you need more days in order to get adjusted to the time zone. It's a lot easier flying west. And I do remember that because when I was going to school in the US and when I used to travel to India, which is flying east, then that was worse. That was more brutal for me when I was flying back to the US, in other words, flying west. So yes, flying east takes more toll on your body than it does flying west. That's why I was a lot more exhausted in Sydney than I am over here back in Dubai. Yes, I always said that to see you nerd out, Baited and Hooked. Yes, you got me, because I very much like to read up on aviation, airspace, time zones, travel, like geography. It's all very interesting. I got to learn a lot of things about Australia as well. As a continent itself, it's very similar to the US in the way it looks, but most of it is uninhabitable. Like, there's not people living in the middle of Australia. Like, literally, it's only the coastal cities that people are there, and the population is like only 27 million. And again, geology and geography make a huge impact on what Australia is and could be in the future. And so, the land that is way too south. But anyway, yes, I'm not going to talk too much about all of that right now. Let's get back to Nvidia earnings, because that is why you're here. That is the most important information for us to look into, and then of course we'll move back to some of these other topics later. Okay, so show me SoFi. Ishwar says, Harish, Karthik, tell us about AMD typical price action on Nvidia earnings. So let's just quickly go over to the options chain, and then we'll take a look at the expected move. I went over this very briefly in the 2-minute video yesterday, but if you come down and if you take a look at the, let's see, the options chain over here, and what we're looking at, of course, is a very, very, very strong put call interest. In other words, the open interest is 0.71, right? So there's way more call options open than there are put options. You got the 185 call expiring this Friday. So there's a lot of call options open. 86,000 currently open for this Friday. That is August 29th, 185 strike. Then you've got 190, you've got 195, and 200. So 185, 190, 195, 200. That pretty much makes up for, I want to say, like, very quick mental math here, 68, 65, 130, 200, 286, almost 290,000 contracts currently open for those next 4 strikes here, for all of them expiring this Friday. So you can imagine how much open interest on the call side traders are betting on Nvidia right now for the upside, right? For this bigger move to the upside for Nvidia. So that's where we are. This is of course the expected move right now on Nvidia. So again, it's about going to be plus minus 5%, 5.8%. So this is something that I went over yesterday in our video as well. So you can see the expected move by August 29th is about $10.61 plus minus. That's going to be 5.84%. So the lower price ends up being around 171 and the upper price is 192. So if it gets up to 192, of course, the 180s, the 185, the 190s, all of them are going to be in the money. And the 195 is going to be out of the money. 200 is going to be out of the money, but it's still going to jump in premium prices because, calls usually go up when prices go up, right? Because they are positively correlated. So that's the expected move. And of course, the longer you go out, farther out in time, by 2027, of course, the wider the range for the expected move as well. So here we go. Markets are closed, officially closed. This is going to be NVIDIA's 1-minute chart. We're going to keep a close eye on this. Do me a favor and definitely drop a like, subscribe if you haven't already. And I will call out as soon as the numbers come out here from NVIDIA. We're going to jump over to the earnings correspondent. They're usually the first ones to report as soon as the numbers are released. And then I'll keep it over here. And as soon as they come out, I will shout them out, and then we'll take a look at the earnings reaction as well. So here we go. Make sure to also participate on the poll that we have going on right now. Definitely participate. Let us know what you're expecting from Nvidia stock. Is it going to be a rally? Is it going to be a crash? And again, earnings are going to be released around 4:20 p.m. Eastern, okay? 4:20 p.m. Eastern. Stock may be moving a little bit prior to that. But yes, we've got about 18 minutes until the earnings are released. And let me just quickly go over to StockTwit's Twitter. We'll just go over to this because they posted something very, very funny. Very interesting that I want to go over, which is of course this. No pressure, Nvidia, the global stock market, and Nvidia. It all comes down to this stock. It always does. All comes down to this one company that is going to make or break this market. So yeah, definitely participate in the poll. We're gonna end it shortly, right before the earnings come out at 4:20 p.m. So definitely participate. And right now, we basically closed flat after hours. We're just up over 30 basis points, so nothing too crazy, but this is going to be an important one. A very, very important earnings. Yeah, so 4:20 p.m. is when they're reporting. So let's do this. Okay, how are you playing Nvidia earnings? Yes, definitely share your plays. Definitely let us know what you're doing. You already know mine. This is going to be my portfolio. This, of course, is going to be all of my Nvidia positions. This is the open P&L. Everything is right in front of you. Again, the total cost for this portfolio, about 158. Net liquidity right now, the total portfolio value sitting at 254,000, approaching almost about $100,000 in gains in this portfolio. So right now I can see the P&L is up over $96,000. So we'll see if we can cross 100,000 on Nvidia earnings. Who knows? We'll see. If it happens, it'll be a great milestone for the options portfolio. But of course, Nvidia could also tank, which would not surprise me one bit, given the optimism, given the high expectations, given everything that this stock stands for, and of course how much it's been ripping higher this year. I mean, year to date, Nvidia is up over 33%, which you wouldn't think is a lot, but for a company that's worth over $4 trillion, it is a lot of money, a lot of liquidity flooding into this company. So it is quite a bit, for a 4.4, almost a $5 trillion stock, up over 33 billion. So Nvidia's market cap hits 4.4 trillion, a 700 billion lead over Microsoft, the largest gap ever. An earnings report on Wednesday may greatly affect its share price, stock price today as well. So All right, let's see. Let's see what kind of trades people are taking here. Vape Revolution says 40 contracts, 175 puts, bang or bust. Those are kind of like those Lambo or food coupons kind of trades, which of course are very interesting in their own way. Just of course be careful. Proper risk management is key, and as long as you're comfortable with the outcome, then I guess good luck. Good luck. And yeah, it's always a big day. Like, and there's a few events every year that are very, very important. Of course, the Federal Reserve meeting, FOMC, Jackson Hole, earnings, but more specifically for specific companies because they have such a big influence on the entire market. And Nvidia is definitely one of them. So yeah, 15 more minutes to go. 15 more minutes and we'll be able to take a look at the numbers. In the meantime, Snowflake came out with a beat in EPS and revenue. So EPS coming in at 35 cents per share with the revenues of about 1.14 billion. Beat on both accounts. EPS up 94% year over year and revenue is up 32% year over year as well. And then up over quarter for the company as well. So if you take a look at Snow, it is popping 10% higher, 221. Very, very strong green candle coming in on some very strong beats for Snowflake. So there we go. Very good numbers being reported from Snowflake. Nvidia is pushing. 182 is where we're at. So we'll see if that momentum holds up after the earnings come out. So 0.5% higher. SoFi really did struggle today. Down about 2.5%, struggling at the $24, $25 range. Of course, it's trading at almost near 52-week highs, so can't complain. But last couple of days, of course, for SoFi has been not the strongest. It's been a little bit weak. And support level, I've got that down to $20 roughly for SoFi. So we're gonna end the poll in about, I would say, another 10 minutes. 10 minutes, we're going to end the poll here, so make sure that you participate. We got 62% right now expecting for Nvidia to rally after the earnings, and that is very, very similar to what the options chain is also pricing in for, although that is about a 71% probability that the price is going to be higher. On a net, obviously on a put call ratio basis with an expected move of 5.84%, upper price of 192, lower price of 170. Even if it gets down to 170, that's still okay. That's still pretty fine. It's not the end of the world, but yes, it's going to be a nice little pullback for Nvidia after having rallied for such a long time at such high levels. So that's where we are, and we're going to end the poll in about 10 minutes here. So make sure that you put in your votes. And then we'll take a look at the reaction from the stock. Yeah, it's these are all binary events for the market, so it's almost impossible to predict where the price is gonna go, like what the reaction is gonna be, and so that's a discussion that we're better off not having or avoiding altogether because nobody at the end of the day really has any idea. We can kind of gauge a little bit. We can look at the options chain, we can look at the expected move, we can look at the technicals, we can look at historical earnings volatility, but all of that really is what it is. Like, it's not anything definitive, it's not a guarantee, it's not 100%, it's not predictive. It's trading and investing is very much about probabilities and managing risk. And more so managing expectations. So if you can do that, then you're going to have a very, very good time investing and trading. You're going to have fun. You're going to make money. But if we're going to be in this constant predictive mindset of making bets on binary events, then that's never going to work out long term because as humans, we're very bad at making predictions. We're very bad. And so it's better off to kind of judge the risk reward and then obviously trade off of that, invest off of that. So David says, days like these are more exciting than the Super Bowl. I mean, I don't know, man. Super Bowl, yeah, that you're right. You're right. Absolutely true. But I think there's a lot of things I feel more exciting than the Super Bowl. I just can't stand 4 hour long games. I can't. As much as I love watching football, and New England Patriots has been long been my team since I've spent most of my time in Boston, but I can't stand a 4 hour game. Like it's too much. It's a long time. It's a long time. So it's a lot of time. Cricket? No, I don't watch cricket either. I only really watch soccer, and only that's also gone down quite a bit over the years. Um, I would still catch a few games, some of the big games every now and then, but yeah, I mean I could really. Oh, absolutely not. Test cricket? Definitely not. Definitely not. I can't stand watching the Patriots either. Oh, come on. For SoFi this year, I mean, I've got a $30 price target. But no timeline attached to it. I do feel like I would say short to medium term, 6 to 12 months. I think is a fair timeline. But $30, given the momentum, just given the overall, execution from the company and the multiples and everything, SoFi stands out as a better risk adjusted bet. Compared to some of the other companies like Palantir, absolutely not touching it. Tesla, same thing. But SoFi actually stands out for what the growth rates are going to be, and then what the potential is for that company. So that's why I've been accumulating a little bit. Again, my light buys and my heavy buys were in the $9 to $10 range. April, we got down to those levels. It was trading at 860s and $10 SoFi. Since then, it has gone up over 100%. It's now sitting at almost $25. So, yeah, I mean, SoFi is kind of like my high conviction stock, where I do believe it's got tons of potential still left, and $30 is my target right now. Yes, 2026 World Cup in LA, inviting Karthik. So yes, I'm definitely gonna be there. I am most certainly gonna be there, uh, but trying not to visit too many places to watch too many games. I'm gonna probably stick to the East Coast, New Jersey, New York, Boston, and then may even travel to Toronto. But like those are the only cities that I'm actually planning on catching a few games for the World Cup. So, but yes, if you guys are gonna be there, let's plan something. It'll be pretty cool to watch World Cup, together. Um, if you can arrange that, that would be pretty nice. Um, but yeah, I'm super excited for that. Are you worried about your six in the money covered calls? Not really, because obviously these ones are with a strike of 160. I still have time. I can most certainly roll them out, up and out. So I'll most likely get them up to 165 or 170. But at some point, I also need to kind of reposition the portfolio a little bit, because Nvidia does make up a pretty big chunk of the entire portfolio here. So for the options portfolio, so I mean, if you do the math, I've got, let's see, 182,000 in Nvidia off the 254. So what is that in percentages? That's going to be 71% in Nvidia, which is reporting earnings in about 7 minutes here. So yes, that's a pretty big chunk of the portfolio. It's essentially Nvidia portfolio, right? I mean, other stocks are pretty negligible. So whatever Nvidia does today is obviously gonna affect my portfolio quite a bit. And so I do want to reposition a little bit. I do want to get some shares out, and then put them into something else a little bit more high conviction. Because, like I said, Nvidia is a fantastic company. It's an amazing business with a strong growth potential. But in order for Nvidia to give me the same returns as I could get with a smaller mid cap, Nvidia has to get another $4.5–5 trillion market cap to increase by 100%. Whereas if I were to compare this, let's say SoFi, for example, from 25 to $50, right? SoFi's market cap right now is sitting at around 29 billion, 30 billion, right? What's easier, going for SoFi from 30 billion to 60 billion? That's still 100% gain, or for Nvidia to go from 4.5 to $9 trillion. That is also 100% gain. So in percentage terms, they're both 100%. But I feel Nvidia's $4.5 trillion run to $9 trillion is going to be way, way, way more challenging than SoFi's 30 to 60, right? So from that perspective, I think the risk-adjusted return for SoFi seems a lot more lucrative than that of Nvidia. So I do want to kind of reposition a little bit outside of Nvidia. Wall Street Holics, why don't you put extended hours column on your TradingView watch list? It's too many columns then. I would have to extend this out a little bit further. I mean, I have had that before, extended hours, but then I've got to readjust the rows and everything. I mean, what I could do for now, I could just remove the change and just put the extended hours. So, or just remove this as well. Yeah, we could just have this. Yeah, there we go. Now it's just showing us the extended hours. All right, everyone. So Nvidia earnings coming out in about 5 minutes. 5 minutes. Revenue expectations, again, $46 billion. EPS about $1. Nvidia is pushing up 43 basis points right now, over 182 at the moment. And expected move is just under 6%, plus minus, upper range at 192, low range at 170. Right now, we're right in the middle of that range. And I'm going to end the poll in about a couple more minutes here. Once we're just about getting ready to get those earnings, and then let's see the reaction. 62% right now, still expecting Nvidia to rally. I don't know. Got a small gut feeling that it might not, because of all the bullish sentiment around the options chain and also the poll that we're doing. There is a lot of optimism around Nvidia, but who knows? I'm not one for making bets. That's why I don't gamble ever. You know, it's kind of interesting because I do like playing poker, but definitely not things like roulette or... I feel like even blackjack, there's not much skill involved. It's mostly... It's a lot more... There's more an influence of luck than it is skill. But anyway... So, 3 more minutes left. 3 more minutes left here. Yes, poker requires skill, for sure. That's why I like playing poker more so than anything else. So we're going to end the poll now. 62% is going to be the final verdict, as everyone is expecting Nvidia to rally. Quick look at CrowdStrike, so CRWD. CrowdStrike, it's also one of our shopping list stocks here. They also reported earnings, and we're looking at a beat by 12%, 93 cents in earnings per share, and then a 2% beat on revenue, just over 1.16 billion, just under 1.17. EPS is down 11% year over year, revenue up 21%. On a year-over-year basis. It is selling off down to $395, so it's now under $400 for the first time since April. So since April of this year, it's the first time we're seeing CrowdStrike below $400 here. But shifting focus back to Nvidia, as we are now 90 seconds away from Nvidia earnings. So let's do this, everybody. Let's see what the market has in store for Nvidia. All right. Yep, poker is very similar to stock market. It's about the probability. Absolutely. Agreed. 100%. It's risk reward, knowing when the time is right to make more aggressive bets versus when it's time to be more defensive, being strategic, all of that. Great qualities of a great poker player and a trader as well. All right, 30 seconds to go. And as soon as the numbers come out, I'll shout it out and we'll take a look at the earnings correspondent. They're usually the first ones to get these numbers out. And then we'll shift focus to the actual NVIDIA's earnings website, to quarterly reports. We'll take a look at the entire results. Data center, gaming, robotics, all of that. What the year-over-year growth looks like, GAAP and non-GAAP numbers, everything. Okay, it's 4:20 p.m. It's officially 4:20 p.m. here, and let's see if we have any numbers. Nvidia is 182.64 right now, so pushing higher, 0.5%. %53% and 44% is the growth rate expected for Nvidia, by the way. So 75 basis points, 183 right now is where we are. All right, so here we go. $44.1 billion in revenue, and also it is up 12% on a year-over-year basis. The numbers are indeed out, and wow, what an insane drop for Nvidia. So 12% increase in the actual revenue. So Q4 and data center revenues of $39.1 billion, up 10% from Q4, up 73% on a year-over-year basis. And oh my god, that is a massive drop in the actual stock here. Obviously 44.1 billion, by the way, coming in, and EPS coming in at $1.05 per share. Revenues at 46.7 billion, and then second quarter adjusted gross margins of 72.7%. So 72.7% is the gross margin. Nvidia second quarter revenues coming in at 46.7 billion versus estimates of 46 billion. So we got a beat on revenue. Net income coming in at 26.4 billion, and second quarter EPS coming in at about $1.08. So if we reload this page, we have the numbers now. So these are the numbers, as you can see, about $1.05 in EPS, 46.7 billion. Both beats. EPS up 54% as expected. This is, what I mentioned earlier. Revenues also up 56% year over year, and quarter over quarter 30% for EPS. Revenue up 6% quarter over quarter. But that was a massive drop in the stock, as it was pushing up to as much as 183 and then immediately dropped a little bit over 6% down to 172 in a matter of just 2 minutes. And that is a 6% drop for a $4.5 trillion company. So we're talking almost 250, close to $300 billion worth of outflows in just 2 candles. That is a lot of money flowing out in just 2 minutes out of Nvidia. It's down almost 4%, but still settling in right around the 174, 175 level for Nvidia at the moment. So that's what we have at the moment, is about 3% lower. Beat on revenue, beat on EPS, up 54 to 56% on EPS and revenue year over year. So again, very strong numbers coming in. And the data center revenue was also higher for the year. But we'll see if it's able to recover throughout the day as Jensen Huang also starts talking. So I'm going to pull up the full report here very quickly while I have the stock price right in front of us. But yeah, I mean, there was a lot of optimism going into these earnings, right? So there was, of course, a lot of bullishness going into these earnings, and that's why I was a little bit skeptical that we may not see a rally in the stock price. So yeah, 3.7% again, data center revenue, and let me just pull that up for you as well. So revenue 46.7 billion, data center revenues 41.1 billion. That is up 56%. Blackwell data center revenue grew 17% sequentially. Gross margins, as I mentioned earlier, 72.7 and GAAP EPS of about $1.08, which is also a beat. So beating on expectations, obviously on estimates. And for the third quarter guidance, also coming in very strong. Guidance was also pretty good. Gross margins expected at 74% versus 72% expectations here, and revenue expectations at $54 billion, which is actually $8 billion higher. $8 billion higher than what the estimates were. Estimates were $46 billion. They're guiding for $54 billion in revenues for the third quarter fiscal year 2026. So that's where we have for the guidance. So yeah, revenue beat, EPS beat, net income growing at 59%, revenues up 56%, EPS up over 60%, adjusted EPS up 54%, data center revenues up 56%, guidance also coming in with a strong beat here. But that's what I'm talking about, right? When expectations are so high, you're so high on the expectations here, obviously it becomes more and more challenging for the stock to keep ripping higher, for the stock to keep meeting those expectations, obviously, from Wall Street, because at some point it has to kind of level off. So, okay, let me just share this and we'll go over that together. Starting to recover a little bit. Going over to my portfolio, it's immediately down 5,000. So obviously, since it's a big position for me, as I mentioned earlier, it is taking a toll as Nvidia is dropping, and of course, most of that coming from Nvidia, of course. But we'll see if you're able to recover, if you're able to recover a little bit throughout the day. So there we go. That's the 3-month ending. That's a 6-month ending report here. You got the overall. Let's see, down here, non-GAAP net income sitting at around 6 months ending around 45.6 billion, and for this particular quarter ending in July 27, 2025 at 25.7 billion, which again is a very strong growth compared to 2024 of just under $17 billion for the company. And then diluted net income per share, about $1.04 on a non-GAAP basis compared to 96 cents in the previous quarter. So quarter over quarter, about a 16% growth there. And free cash flow, I think free cash flow was pretty flat. We're looking at around 13.4 billion versus the same number, and obviously a 50% drop on a quarter over quarter basis for the company. And let's see. And they also did put in a share buyback of about what did I read? So share buybacks of about, I think they've authorized about $60 billion worth of share buybacks. Yeah. So we're seeing a little bit of recovery right now for the stock, but obviously still down. Guidance is good. Revenue, EPS across the board, very strong beats, but we'll see if there's any kind of recovery. Why is Nvidia down with all the beats? Bobo was asking. So again, this is all about expectations. It's all a game of perception, right? I mean, if the expectations are so high, and yes, they're coming off with a strong beat, but they still can't live up to those high expectations of the stock that obviously has been rallied for such a long time. It's still trying to recover, and again, 2%, 1.8%. I wouldn't consider this like a big sell-off. It is slightly down, yes, but if we'll see what Jensen Huang has to say in about 30 minutes. That's when the actual earnings call begins. So we'll see if there's any relief to the stock here. But again, 1 to 2% is still nothing crazy in my view for any stock that's reporting their numbers. So we might even be flat right now. We're seeing this dip getting bought up From 172, it's back up to over 179, almost 180. So there's already been a 4% recovery for Nvidia. So not too bad, not too bad. And again, this is the state of the portfolio. It was down over 5,000. Now it's down just about 3,000. And one thing I want to mention is that the call options have not been adjusted, right? So they don't really trade after the markets close. So these 10 calls that I have, they haven't moved. You can see the P&L for the day is pretty static. And so as a result, they are... One second, let me go back. Yeah, so they're pretty static and they're not moving. So that hedge is not being accounted for. Yeah, Nvidia's down for absolutely no reason. Yeah, it's down almost 2%. It doesn't seem to be much of a reason why it'd be down. All right. So this is the second quarter fiscal year 2026 results. $1.08 in diluted earnings per share. Net income $26.4 billion. Operating income $28.4 billion. Also, we got gross margin 72.4%. $46.7 billion is the revenue. Year over year, if you take a look, I mean, this is some very, very strong numbers. Even on a quarter-over-quarter basis, there's a lot of expansion. In margins, we got growth in revenues, growth in operating income, net income, and EPS as well. These are your non-GAAP numbers. And then if you come down, this is going to be the reportable segments. Computing and networking, $41.3 billion. That's, again, a 56% growth. Graphics coming in at $5.4 billion, 51% growth for the company. Data center was up 56%, just over $41 billion, of which compute just over 33.8 and networking 7.2, gaming 4.2 billion, almost a 50% jump there. Professional visualization 601 million. We got automotive just over $500 million, and OEM another 173 million. And all of these high growth markets for Nvidia, 70 to 97% growth here, 49% growth for gaming, and about 56% cumulative growth for data center, total 56%. And then revenue for the second quarter was so-and-so, 56% higher, 6% quarter over quarter. Gross margins, balance sheet and cash flow. So cash and cash equivalents sitting at about 56.8 billion, up from 34.8 billion a year ago. I mean, this is a very, very cash-rich, cash-heavy company. Accounts receivable, 27.8 billion with 54 days in sales outstanding, up from 46 days sequentially. Inventory was 15 billion, up from 11.3 billion. Total purchase commitments were about 45.8 billion. Cash flow from operating activities 15.4 billion, up from 14.5 billion a year ago, down from 27.4 billion a quarter ago. It reflects growth in revenue, partially offset by an increase in working capital. Okay, so sequential decrease was mainly driven by an $8 billion in taxes paid in the quarter. We returned $10 billion to their shareholders in the second quarter through $9.7 billion worth of repurchases and $244 million of cash dividends. And there we go, $60 billion is what I mentioned. On August 26th, the board of directors approved around $60 billion to our share repurchase authorization without expiration. So they're definitely going to be buying back a lot of shares over the course of next few years. And in terms of guidance for the third quarter 2026, we're looking at 54 billion, as I mentioned, plus minus 2%. We have not assumed any H20 shipments to China in our outlook. So I strongly believe that this is a dip that will largely be bought in the next couple of days once people start to realize what this actually means. So revenue of 54 billion. If we compare this to what that growth rate looks like on a year-over-year basis, and this is not even including for the H20 shipments to China, which they've been approved for from the U.S. government. Of course, there's going to be a 10% fee given to the U.S. government as part of the process as well. But if you take a look at revenues, 35 billion in the quarter ending in October of last year. So if we're looking at 54 billion, 54 divided by 35, we're looking at another 54% growth rate year over year without even looking at China shipments of the H20 GPUs. So that is, in my opinion, if it comes in at 60, 65 billion, I mean, we're talking upwards of 70 to 80% growth rate on a year-over-year basis for the third quarter with margin expansion as well. So you're potentially looking at higher EPS and higher bottom line net income. Operating expenses expected to be approximately 5.9 billion and 4.2 billion respectively. We expect full year fiscal year 2026 operating expenses growth to be in the high 30% range. And then tax rates around 16.5% plus minus 1%. And yeah, that's the entirety of the numbers, and of course a commentary from the CFO. We'll wait for Jensen Huang in about 25 minutes is when he starts talking. But as I said, I do believe that over the next couple of days, it's possible that this dip largely gets bought, given what I'm reading right now. So, Mahi, what does it mean buying back? Is it good for stock? Should we sell or buy? So, buying back essentially means the company itself is putting capital back into their own stock. They're buying shares and they're retiring them. So, in other words, less shares outstanding in the open market, which is good news for investors because there is the opposite of dilution. They're not diluting us. They are, in fact, making our pie bigger by buying back the shares, because every company has to allocate capital, right? In the world of finance, everyone puts money where they see the most value, right? If you can put money into something that's going to give you a 20% return, and if you can put money into something that's going to be the same amount of risk, is going to give you 5% return, obviously you're going to go with 20% for the equivalent level of risk. Same thing for companies, right? Companies also have capital to allocate, right? They can use that capital in multiple different ways. They can use it to put it into research and development, hiring new talent to grow their company if they see that's where the value is, or they can actually go out and start buying companies with that capital if they feel they're going to make better bets and they're going to invest in those companies to grow, or they can invest in themselves. They can buy back their own stock if they feel that the company is cheap or the company is worth a lot more than what the markets are pricing it at the moment, and so they would essentially do a lot of share buybacks. Apple's been doing a lot of share buybacks for such a long time, and as a result, their earnings per share has just been going higher, even though their net income may be somewhat flat in 2 to 3 years' time. Berkshire Hathaway has been doing a lot of share buybacks as well, and so as a result, Nvidia's $60 billion share buyback also is a vote of confidence for a lot of investors that okay, they're also buying back a ton of shares and retiring them, as a result, lowering the risk of dilution for a lot of shareholders. So how can people sell while markets are closed? Well, there is after hours trading. Obviously, it goes all the way till 8 p.m. Eastern. So we do obviously have another 3.5 hours of trading left. And I think a lot of brokerages now offer after hours. Should I buy calls tomorrow if there is a further dip? So in terms of options, obviously I don't buy calls or puts. I mostly am selling options for the most part. But like I said, I think the numbers were very, very strong. The guidance is also pretty good. We did see a couple red candles immediately put us down to 172. We'll see what Jensen Huang has to say about the future of Nvidia, and we'll see if it actually gets some kind of recovery. But I do expect it to get bought up in the coming days because, I mean, without including for China revenue, you were guiding for 54 billion when the expectations were 46, another 54% year-over-year quarter, and it can get up to at 60, 65%, depending on how the new releases of the H20 goes in China. So I think that's a very, very bold comment from Nvidia's guidance. So what's your Nvidia position size? So this is what it looks like. I am now down 6,000 on the day, thanks to Nvidia. Fantastic. But yes, Nvidia position right now is sitting at around 176,000. So this is the entire portfolio. Do you think we'll have a bloody September again? It's kind of, again, hard to say. But yes, the the seasonality does point to not the best month. So would not be surprised if we do see red, because if you come over to the seasonality table, you'll notice that we haven't had a red month. August is also green, I believe. So if I come over to SPX monthly, yeah, we're up 2.24%. So 2.24%. So we've had 4 straight months of green so far. April, May, June, July. No, May, June, July, August. May, June, July, August have all been green for a total gain of 14.5%. And of course, since the low of April 7th, the S&P is officially up over 32%. So this has been a very strong momentum and a rally for the market. So wouldn't be surprised to see some kind of red in September. Okay. Yes, our slice of the pie is getting bigger. Yes, exactly. Not the pie itself. It's. I mean, you could have one share worth 4.5 trillion, or you could have 4.5 trillion shares worth $1, or a mix of something in the middle, right? Which is what Nvidia has, which is what most companies have. They've got the number of shares, and then of course the price, the market price that dictates the market value. So the pie is the same, right? It's the market value of the company, that is the price times the number of shares. But if there's less shares, right, then obviously the slice of the pie gets bigger for each shareholder, but the pie stays mostly the same. So yeah, so that's what I meant when companies do share buybacks. When does he speak? So Ed, he's gonna start talking about 20 minutes now. It's gonna be 1 a.m. for me. Fantastic. But it's going to be most likely 2 p.m. Pacific, 5 p.m. Eastern if you are in New York or California. So it's going to be around an hour after the markets have closed. So in about 20 more minutes here. So let's see. What happened with Nvidia, Fred says. I heard that puts on Nvidia were much more expensive than calls, so the setup was being prepared before the print. Yes, so we were, Joe, suck it up, drink coffee. Damn, shots fired. No, I'm gonna be here. I took a nap when I landed after a 14-hour flight. Super long flight. And yeah, so I landed, I got home, I took a nap, I had food, then I took a nap, and then I just woke up a couple hours ago. I still have a lot of work to catch up to, like a lot. So most of my day tomorrow and the day after is just gonna be catching up. But you think Powell cuts not save September red? So it's kind of interesting because usually when Jay Powell and the Federal Reserve have started cutting interest rates, markets have actually seen a short-term bearish reaction to rate cuts. I don't know if I have that. If I have the rate cuts, Fed policy, or let me see, Fed's balance sheet. See, I don't have that spreadsheet right now, or I can't remember the name, but I've done this analysis in the past where after every rate cut, I'm trying to remember what that name of that spreadsheet was. I created something which was so detailed. I need to bring it back up, but I'll definitely put it up in one of the videos where we've talked about that after the rate cut, markets have actually gone down on a short-term basis, only to then, of course, rebound later. But we have seen a bit of a negative reaction to rate cuts in the beginning, and then, of course, they have pushed higher. Yes, zero guidance for China sales. The call should change the color of the mood ring. Here, Jensen's comments will be impactful. I agree. I think. So what is the historical P range for Nvidia? That's a good question. Let me just come over here. And by the way, the market's closed around 3.79 on the MoneyVest index, so we're still pretty optimistic at the moment. So if you take a look at the average over the last 10 years, it's been 93. So of course it's been much higher. This has been the overall last 10 years. Obviously it's traded at very high multiples, and it's come down quite a bit as earnings have grown significantly. But more recently, of course, on a forward basis, it's now starting to trade in the 30s. So because the guidance has gone up, quite a bit. So it has been an expensive stock in the past, but financials and fundamentals did catch up to the actual price and the valuation eventually, which is what happens, right? Most of the times, when stocks get out of their own range, in other words, the fundamentals get very expensive. Like let's take Palantir for example. Stock trading at over 250 times earnings. There's one of two things that need to happen and will always happen in the future. It's either the price comes down to align itself with the fundamentals, or the fundamentals catch up to the price eventually. Without these two, because any company that's worth multiple hundreds of billions or trillions of dollars, and you look at the top 50 S&P 500 companies that are in terms of market cap, that's actually a pretty good study for us to also do, is no one of them, not one of them trades at over triple digit multiples, right? Not one of them, triple digit multiples. I guess the only exception to this rule is Tesla. Tesla might trade at a multiple that is insanely high, even at these levels. $1.1 trillion company, obviously Magnificent Seven, fits in the top 10, and the PE multiple still, I think, might not be on a forward basis. It might not be triple digit, but I think it might be. Let's just take a quick look. I think the last time I checked was around the 93, 94 level. Oh no, 4P 180, yeah, so it's pretty high. So it might be the exception to the rule, but most companies, they actually come down on the multiples as they're growing. And so as a result, one of two things needs to happen: is the price comes down, or fundamentals catch up. So in Palantir's case, I do think the fundamentals will eventually catch up. And yes, a valuation for Nvidia is not as crazy as Palantir, I agree. And Nvidia is still pretty reasonably priced. But again, we're kind of built on this expectation that earnings growth is going to be very strong. And I think the reason why it's been so good so far has been because of Nvidia's defensible moat. I mean, they're the only ones that are doing what they do best. AMD somewhat dropped the ball on artificial intelligence. It's now starting to pick up really well. But if you take a look at EPS, I mean, it is expected to go from like $3 to almost $8. That's almost a 200% growth in about 5 years. So that is a massive increase in earnings. Margins have been incredibly strong. I mean, just take a look, 43% for a hardware company is insanely strong. So, I mean, these are the kind of margins that companies like Visa and software payment processing companies are able to achieve. But Nvidia's margins and the defensible moat and the management is what really keeps it at the top. Yeah, Corey says, I think the big three will have issues to give above average gains due to immense market caps. Yeah, it's an interesting topic of discussion given that the market caps are so large for these companies. But then I'm also starting to kind of somewhat have this realization that the dollar, I mean, it's just losing its relevance with time, because now $1 trillion doesn't feel like $1 trillion anymore, right? And I've seen so many personal finance videos and so many like topics of discussions. Okay, how much money do you need to retire, right? $1 million today is not the same as what the $1 million were, let's say 5 years ago or 10 years ago. Now you need a lot more to retire. Obviously, $100,000 job doesn't go a long way in the U.S. anymore. So obviously, especially depending on where you're living, definitely doesn't go long in California. But it's the dollar, losing its value obviously takes away from the fact that these numbers are getting larger and larger. But the value is what is still either the same or marginally increasing, but the effect is not the same. So I mean, we could see Nvidia at 10 trillion or 15 trillion, right? If it keeps executing like this, and if this is where we're headed with semiconductors and artificial intelligence, and everything is going to be digital and technology and everything. So, but yeah, I do think that Nvidia, Google, like the Magnificent Seven, to your point, they're still going to give us good returns, but for great life-changing returns, for the best winners like 5x, 10x, 20x type gainers, we have to look in the small to mid cap range, and we have to be very careful with those, because for every one Palantir, there's hundreds and hundreds that don't show up on anywhere. They're not profitable, they're not successful, they don't go up 25 times as Palantir has in the last couple of years. So it's finding a needle in a haystack. So it's Palantir, SoFis of the world are very rare and far and few between. So we have to be very, very careful with where we put our money, especially in the small and mid cap space. Okay, the earnings call starts in about 9 minutes, everybody. Nvidia is still down over 3.6% for everybody joining in. We got a beat on revenue, beat on EPS, beat on guidance, beat on data center. I guess beat across the board, and guidance was also pretty strong with a strong share buyback, and the stock still managed to sell off. That's the stock market for you. Ruffle says shorted 500 Nvidia after hours at 182 and just covered at 175. That's very good. That's solid. Congratulations, and congrats to, I think, another one of our members and subscribers who took the 175 puts on Nvidia. Very, very nice. Word is they missed data center revenue. I think it came with a beat. So by the way, $7,700 down now. Nvidia alone for me is down over 6,500. This is not accounting for the calls that are hedged, because I've got the 180, 175, and 160 call. All of them, you can see they're pretty stagnant. They're not moving. They're most likely going to be higher tomorrow. So that, of course, is going to offset a little bit of the losses for the day. And that's one of the big things why I like to trade options in general is for this portfolio, because when it goes up, when the stock goes up, obviously I get to benefit on the upside, but then when it goes down, I get to also protect some of those gains. In other words, they're hedged, right? The losses are not as brutal as if I were just holding on to the shares themselves. So let's see. I feel safer investing in Google, Meta, and Amazon because of P's and half of big three market cap. Yeah. So Tom Lee says he's bullish on financials if they will gain most from AI. Any financial ETFs you are fond about? I do think that XLF is pretty good. We have JP Morgan as part of our shopping list, which has done really well. But XLF or VF... yes, that's the ticker symbol, Vanguard Financials ETF. This one's also pretty good. If you're looking for a ETF that specifically focuses on banks and financial institutions, it's got a 1.67% dividend yield, year-to-date up 10.8%. And again, this is also part of the ETF shopping list as well. Okay, so if you come over to our Patreon here, I do post a lot of videos, options portfolio updates, normal stocks and personal finance videos, but then I have also posted a 52 ETF spreadsheet which you can download, and it's going to give you a full breakdown of all the Vanguard ETFs, different issuers broken down by assets under management, liquidity, the focus. In other words, what's the objective of that ETF itself. It's just going to be, there's a lot of technical analysis videos as well. I mean, it's going to be somewhere down there that you're going to be able to see. But yeah, there we go. So there we go, 52 ETF shopping list. So you can download this. It goes over 52 ETFs, all broken down by growth and value and dividends and, income, metals like commodity, gold, silver, Bitcoin, crypto. So I spent a lot of time on this, researched it, analyzed it, and only included the ones that I trust, issuers that I trust with strong liquidity. So in other words, good volume. And then of course, they have to have a lot of assets under management to make the list, because we don't want something that's, fairly new and nobody's heard about it with no assets under management, and next thing you know, they disappear. Do you ever buy puts to hedge your positions? No, not really. I feel like buying options in general has a lower probability, but I would use them with other strategies. So, credit spreads or iron condors require you to buy options. So those are the ones that I might, even poor man covered calls, but then you're going out with buying leaps and then selling calls against it. So those are strategies that I may utilize, but not buying puts just to hedge for a potential downturn. I'm better off just like selling calls because I'm generating a premium along the way as well. So, all right, so about 4 more minutes. I'm going to do a bit of an audio check. Right, so I'm going to do an audio check as soon as okay. I'm going to do an audio check as soon as they start, and then let me know in the comments if everything is working well. And then we'll get started. Where's the party? Feels so down. I'm tired. That's what it is. I'm really exhausted after all the travel. So next couple days, just gonna be getting back into the schedule, and of course gotta catch up to a lot of emails and messages. But yeah, so this is where the party is. This is where my portfolio is on the option side, and obviously this is the red that you see is the party, down over 6,400 on Nvidia earnings, and yeah, down almost 3% Nvidia stock is on the day. So is it a good idea to sell calls after the earnings? You want to sell calls when the stock is really green, because that's when you get a lot of call premiums to jump up. So if you're trying to maximize your premiums, I personally sell calls when it's a really green day. And so if Nvidia is red today and if it opens red tomorrow, then selling calls is not going to fetch you high premiums. You're better off waiting for a very good green day in order to sell calls. So, but yeah, we'll see if we can turn this party around. If Jensen Huang can turn this party around. Let's see. If he's able to, then that would be great. That would be fantastic. But in general, I do believe that the numbers were overall very strong. Guidance was pretty good. And then I do expect the dip to get bought up eventually at some point because of the numbers. The numbers tell us a bigger story, which is why I'm pretty confident the numbers were very, very good. All right, 1 minute left. I'm going to do an audio check. Again, just let me know if everything's good, and we will listen in on the earnings call, take a look at Nvidia's price action, and let's see what Jensen Huang has to say. Do me a favor, everyone. Please make sure that you drop a like, subscribe to the channel. I would really appreciate that. I cut my trip to Sydney short. I wanted to be back literally the day of NVIDIA earnings. I planned it around it because I wanted to go live and I didn't want to miss out the NVIDIA earnings. I wanted to be live for all of you. So please make sure that you drop a like, subscribe if you haven't already, and let me know if you have any questions. So my email is admin@moneyvest.com. Email me if you want to set up a call. We're more than happy to do that, and we can discuss a lot more things.
Good afternoon. My name is Sarah, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter fiscal 2026 financial results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. And if you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 27th, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered another record quarter while navigating what continues to be a dynamic external environment. Total revenue was $46.7 billion, exceeded our outlook as we grew sequentially across all market platforms. Data center revenue grew 56% year over year. Data center revenue also grew sequentially despite the $4 billion decline in H20 revenue. NVIDIA's Blackwell platform reached record levels, growing sequentially by 17%. We began production shipments of GB300 in Q2. Our full stack AI solutions for cloud service providers, neoclouds, enterprises, and sovereigns are all contributing to our growth. We are at the beginning of an industrial revolution that will transform every industry. We see $3 to $4 trillion in AI infrastructure spend by the end of the decade. The scale and scope of these buildouts present significant long-term growth opportunities for NVIDIA. The GB200 NVL system is seeing widespread adoption with deployments at CSPs and consumer internet companies. Lighthouse model builders, including OpenAI, Meta, and Mistral, are using the GB200 NVL72 at data center scale for both training next-generation models and serving inference models in production. The new Blackwell Ultra platform has also had a strong quarter, generating tens of billions in revenue. The transition to the GB300 has been seamless for major cloud service providers due to its shared architecture, software, and physical footprint with the GB200. enabling them to build and deploy GB300 racks with ease. The transition to the new GB300 rack-based architecture has been seamless. Factory builds in late July and early August were successfully converted to support the GB300 ramp, and today, full production is underway. The current run rate is back at full speed, producing approximately 1,000 racks per week. This output is expected to accelerate even further throughout the third quarter as additional capacity comes online. We expect widespread market availability in the second half of the year as CoreWeave prepares to bring their GB300 instance to market, as they are already seeing 10x more inference performance on reasoning models compared to H100. Compared to the previous Hopper generation, GB300 NVL72 AI factories promise a 10x improvement in token per watt energy efficiency, which translates to revenues as data centers are power limited. The chips of the Rubin platform are in fab. The Vera CPU, Rubin GPU, CX9 SuperNIC, NVLink 144 scale-up switch, Spectrum X scale-out and scale-across switch, and the silicon photonics processor. Rubin remains on schedule for volume production next year. Rubin will be our third generation NVLink rack scale AI supercomputer with a mature and full-scale supply chain. This keeps us on track with our pace of an annual product cadence and continuous innovation across compute, networking, systems, and software. In late July, the US government began reviewing licenses for sales of H20 to China customers. While a select number of our China-based customers have received licenses over the past few weeks, we have not shipped any H20 based on those licenses. USG officials have expressed an expectation that the USG will receive 15% of the revenue generated from licensed H20 sales, but to date, the USG has not published a regulation codifying such requirement. We have not included H20 in our Q3 outlook as we continue to work through geopolitical issues. If geopolitical issues reside, we should ship $2 to $5 billion in H20 revenue in Q3. And if we had more orders, we can build more. We continue to advocate for the US government to approve Blackwell for China. Our products are designed and sold for beneficial commercial use, and every licensed sale we make will benefit the US economy, the US leadership. In highly competitive markets, we want to win the support of every developer. America's AI technology stack can be the world standard if we race and compete globally. Notably in the quarter was an increase in Hopper 100 and H200 shipments. We also sold approximately $650 million of H20 in Q2 to an unrestricted customer outside of China. The sequential increase in Hopper demand indicates the breadth of data center workloads that run on accelerated computing and the power of CUDA libraries and full stack optimizations, which continuously enhance the performance and economic value of our platform. As we continue to deliver both Hopper and Blackwell GPUs, we are focusing on meeting the soaring global demand. This growth is fueled by capital expenditures from the cloud to enterprises, which are on track to invest $600 billion in data center infrastructure and compute this calendar year alone, nearly doubling in 2 years. We expect annual AI infrastructure investments to continue growing, driven by the several factors: reasoning agentic AI requiring orders of magnitude more training and inference compute, global buildouts for sovereign AI, enterprise AI adoption, and the arrival of physical AI and robotics. Blackwell has set the benchmark as it is the new standard for AI inference performance. The market for AI inference is expanding rapidly, with reasoning and agentic AI gaining traction across industries. Blackwell's rack-scale NVLink and CUDA full-stack architecture addresses this by redefining the economics of inference. New NV FP4 4-bit precision and NVLink 72 on the GB300 platform delivers a 50x increase in energy efficiency per token compared to Hopper, enabling companies to monetize their compute at unprecedented scale. For instance, a $3 million investment in GB200 infrastructure can generate $30 million in token revenue, a 10x return. NVIDIA's software innovation, combined with the strength of our developer ecosystem, has already improved Blackwell's performance by more than 2x since its launch. Advances in CUDA, TensorRT LLM, and Dynamo are unlocking maximum efficiency. CUDA library contributions from the open source community, along with NVIDIA's open libraries and frameworks, are now integrated into millions of workflows. This powerful flywheel of collaborative innovation between NVIDIA and global community contribution strengthens NVIDIA's performance leadership. NVIDIA is a top contributor to OpenAI models, data, and software. Blackwell has introduced a groundbreaking numerical approach to large language model pre-training. Using NV FP4, computations on the GB300 can now achieve 7x faster training than the H100, which uses FP8. This innovation delivers the accuracy of 16-bit precision with the speed and efficiency of 4-bit, setting a new standard for AI factor efficiency and scalability. The AI industry is quickly adopting this revolutionary technology, with major players such as AWS, Google Cloud, Microsoft Azure, and OpenAI, as well as Cohere, Mistral, Kimi AI, Perplexity, Reflection, and Runway, already embracing it. NVIDIA's performance leadership was further validated in the latest MLPerf training benchmarks, where the GB200 delivered a clean sweep. Be on the lookout for the upcoming MLPerf inference results in September, which will include benchmarks based on the Blackwell Ultra. NVIDIA RTX Pro servers are in full production for the world's system makers. These are air-cooled PCIe-based systems integrated seamlessly into standard IT environments and run traditional enterprise IT applications, as well as the most advanced agentic and physical AI applications. Nearly 90 companies, including many global leaders, are already adopting RTX Pro servers. Hitachi uses them for real-time simulation and digital twins, Lilly for drug discovery, Hyundai for factory design and AV validation, and Disney for immersive storytelling. As enterprises modernize data centers, RTX Pro servers are poised to become a multi-billion-dollar product line. Sovereign AI is one on the rise as the nation's ability to develop its own AI using domestic infrastructure, data, and talent presents a significant opportunity for NVIDIA. NVIDIA is at the forefront of landmark initiatives across the UK and Europe. The European Union plans to invest 20 billion euros to establish 20 AI factories across France, Germany, Italy, and Spain, including 5 gigafactories to increase its AI compute infrastructure by tenfold. In the UK, the Umbard AI supercomputer powered by NVIDIA was unveiled at the country's most powerful AI system, delivering 21 exaflops of AI performance to accelerate breakthroughs in fields of drug discovery and climate modeling. We are on track to achieve over 20 billion in sovereign AI revenue this year, more than double than that of last year. Networking delivered record revenue of 7.3 billion and escalating demands of AI compute clusters necessitate high efficiency and low latency networking. This represents a 46% sequential and 98% year-on-year increase, with strong demand across Spectrum-X Ethernet, InfiniBand, and NVLink. Our Spectrum-X enhanced Ethernet solutions provide the highest throughput and lowest latency network for Ethernet AI workloads. Spectrum-X Ethernet delivered double-digit sequential and year-over-year growth, with annualized revenue exceeding $10 billion. At Hot Chips, we introduced Spectrum XGS Ethernet, a technology designed to unify disparate data centers into gigascale AI superfactories. CoreWeave is an initial adopter of the solution, which is projected to double GPU to GPU communication speed. InfiniBand revenue nearly doubled sequentially, fueled by the adoption of XDR technology, which provides double the bandwidth improvement over its predecessor, especially valuable for the model builders. The world's fastest switch, NVLink, with 14x the bandwidth of PCIe Gen 5, delivered strong growth as customers deployed Grace Blackwell NVLink rack scale systems. The positive reception to NVLink Fusion, which allows semi-custom AI infrastructure, has been widespread. Japan's upcoming Fugaku Next will integrate Fujitsu's CPUs with our architecture via NVLink Fusion. It will run a range of workloads, including AI, supercomputing, and quantum computing. Fugaku Next joins a rapidly expanding list of leading quantum supercomputing and research centers running on NVIDIA's CUDA-Q quantum platform, including ULIC, AIST, NNF, and NERSC, supported by over 300 ecosystem partners, including AWS, Google Quantum AI, Quantinium, QEra, and PsiQuantum. Jetson Thor, our new robotics computing platform, is now available. Thor delivers an order of magnitude greater AI performance and energy efficiency than NVIDIA AGX Orin. It runs the latest generative and reasoning AI models at the edge in real time, enabling state-of-the-art robotics. Adoption of NVIDIA's robotics full-stack platform is growing at rapid rate. Over 2 million developers and 1,000 plus hardware, software applications, and sensor partners taking our platform to market. Leading enterprises across industries have adopted Thor, including Agility Robotics, Amazon Robotics, Boston Dynamics, Caterpillar, Figure, Hexagon, Medtronic, and Meta. Robotic applications require exponentially more compute on the device and in infrastructure, representing a significant long-term demand driver for our data center platform. NVIDIA Omniverse with Cosmos is our data center physical AI digital twin platform built for development of robot and robotic systems. This quarter, we announced a major expansion of our partnership with Siemens to enable AI automatic factories. Leading European robotics companies, including Agile Robots, Neuro Robotics, and Universal Robots, are building their latest innovations with the Omniverse platform. Transitioning to a quick summary of our revenue by geography. China declined on a sequential basis to low single digits percentage of data center revenue. Note, our Q3 outlook does not include H20 shipments to China customers. Singapore revenue represented 22% of second quarter's billed revenue as customers have centralized their invoicing in Singapore. Over 99% of data center compute revenue billed to Singapore was for US-based customers. Our gaming revenue was a record $4.3 billion, a 14% sequential increase and a 49% jump year on year. This was driven by the ramp of Blackwell GeForce GPUs as strong sales continued as we increased supply availability. This quarter, we shipped GeForce RTX 5060 desktop GPU. It brings double the performance along with advanced ray tracing, neural rendering, and AI-powered DLSS4 gameplay to millions of gamers worldwide. Blackwell is coming to GeForce Now in September. This is GeForce Now's most significant upgrade, offering RTX 5080 class performance, minimal latency, and 5K resolution at 120 frames per second. We are also doubling the GeForce Now catalog to over 4,500 titles, the largest library of any cloud gaming service. For AI enthusiasts, on-device AI performs the best RTX GPUs. We partnered with OpenAI to optimize their open source GPT models for high quality, fast, and efficient inference on millions of RTX-enabled Windows devices. With the RTX platform stack, Windows developers can create AI applications designed to run on the world's largest AI PC user base. Professional visualization revenue reached $601 million, a 32% year-on-year increase. Growth was driven by an adoption of the high-end RTX workstation GPUs and AI-powered workload like design, simulation, and prototyping. Key customers are leveraging our solutions to accelerate their operations. Activision Blizzard uses RTX workstations to enhance creative workflows, while robotics innovator Figure AI powers its humanoid robots with RTX embedded GPUs. Automotive revenue, which includes only in-car compute revenue, was $586 million, up 69% year-on-year, primarily driven by self-driving solutions. We have begun shipments of NVIDIA Thor SoC, the successor to Orin. Thor's arrival coincides with the industry's accelerating shift to vision, language, model architecture, generative AI, and higher levels of autonomy. Thor is the most successful robotics and AV computer we've ever created. Thor Willpower. Our full-stack drive AV software platform is now in production, opening up billions to new revenue opportunities for NVIDIA while improving vehicle safety and autonomy. Now moving to the rest of our P&L. GAAP gross margin was 72.4% and non-GAAP gross margin was 72.7%. These figures include a $180 million or 40 basis point benefit from releasing previously reserved H20 inventory. Excluding this benefit, non-GAAP gross margins would have been 72.3%, still exceeding our outlook. GAAP operating expenses rose 8% and 6% on a non-GAAP basis sequentially. This increase was driven by higher compute and infrastructure costs, as well as higher compensation and benefit costs. To support the ramp of Blackwell and Blackwell Ultra, inventory increased sequentially from $11 billion to $15 billion in Q2. While we prioritize funding our growth and strategic initiatives, in Q2, we returned $10 billion to shareholders through share repurchases and cash dividends. Our board of directors recently approved a $60 billion share repurchase authorization to add to our remaining $14.7 billion of authorization at the end of Q2. Okay, let me turn it to the outlook for the third quarter. Total revenue is expected to be $54 billion, plus or minus 2%. This represents over $7 billion in sequential growth. Again, we do not assume any H20 shipments to China customers in our outlook. GAAP and non-GAAP gross margins are expected to be 73.3%, 73.5% respectively, plus or minus 50 basis points. We continue to expect to exit the year with non-GAAP gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $5.9 billion and $4.2 billion, respectively. For the full year, we expect operating expenses to grow in the high 30s range year over year, up from our prior expectations of the mid-30s. We are accelerating investments in the business to address the magnitude of growth opportunities that lie ahead. GAAP and non-GAAP other income and expenses are expected to be an income of approximately 500 million, excluding gains and losses from non-marketable and public held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial data are included in the CFO commentary and other information available on our website. In closing, let me highlight upcoming events for the financial community. We will be at the Goldman Sachs Technology Conference on September 8th in San Francisco. Our annual NDR will commence the first part of October. GTC Data Center begins on October 27th, with Jensen's keynote scheduled for the 28th. We look forward to seeing you at these events. Our earnings call to discuss the results of our third quarter of fiscal 2026 is scheduled for November 19th. We will now open the call for questions. Operator, would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Thank you. Your first question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess with wafer in to rack out lead times of 12 months, you confirmed on the call today that Rubin is on track for ramp in the second half. And obviously, many of these investments are multi-year projects contingent upon power, cooling, et cetera. I was hoping perhaps you take a high-level view and speak to your vision for growth into 2026. And as part of that, if you can kind of comment between networking data center would be very helpful. Thank you.
Yeah, thanks, CJ. At the highest level of growth drivers would be the evolution, the introduction, if you will, of reasoning agentic AI. Where chatbots used to be one shot, you give it a prompt and it would generate the answer. Now the AI does research, it thinks and does a plan, and it might use tools. And so it's called long thinking. And the longer it thinks, oftentimes it produces better answers. And the amount of computation necessary for one shot versus reasoning agentic AI models could be 100 times, 1,000 times, and even potentially even more as the amount of research and basically reading and comprehension that it goes off to do. And so the amount of computation that has resulted in agentic AI has grown tremendously. And of course, the effectiveness has also grown tremendously. Because of agentic AI, the amount of hallucination has dropped significantly. You can now use it. You can now use tools and perform tasks. Enterprises have been opened up. As a result of agentic AI and vision language models, we now are seeing a breakthrough in physical AI, in robotics, autonomous systems. So the last year, AI has made tremendous progress. And agentic systems, reasoning systems, is completely revolutionary. Now, we built the Blackwell NVLink 72 system, a rack scale computing system for this moment. We've been working on it for several years. This last year, we transitioned from NVLink 8, which is a node scale computing. Each node is a computer, to now NVLink 72, where each rack is a computer. That disaggregation of NVLink 72 into a rack scale system was extremely hard to do, but the results are extraordinary. We're seeing orders of magnitude speed up, and therefore energy efficiency, and therefore cost effectiveness of token generation because of NVLink 72. And so over the next couple of years, you're going to you asked about longer term. Over the next 5 years, we're going to scale into, with Blackwell, with Rubin, and follow-ons, to scale into effectively a $3 to $4 trillion AI infrastructure opportunity. The last couple of years, you have seen that CapEx has grown in just the top 4 CSPs has doubled and grown to about $600 billion. So we're in the beginning of this build out, and the AI technology advances has really enabled AI to be able to adopt and solve problems to many different industries.
Your next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my questions. Colette, just wanted to clarify the $2 to $5 billion in China. What needs to happen, and what is the sustainable pace of that China business as you get into Q4? And then Jensen, for you on the competitive landscape, several of your large customers already have or are planning many ASIC projects. I think one of your ASIC competitors, Broadcom, signaled that they could grow their AI business almost 55-60% next year. Any scenario in which you see the market moving more towards ASICs and away from NVIDIA GPU? Just what are you hearing from your customers? How are they managing this split between their use of merchant silicon and ASICs? Thank you.
Thanks, Vivek. So let me first answer your question regarding what will it take for the H20s to be shipped. There is interest in our H20s. There is the initial set of licenses that we received. And then additionally, we do have supply that we are ready. And that's why we communicated that somewhere in the range of about $2 to $5 billion this quarter, we could potentially ship. We're still waiting on several of the geopolitical issues going back and forth between the governments and the companies trying to determine their purchases and what they want to do. So it's still open at this time, and we're not exactly sure what that full amount will be this quarter. However, if more interest arrives, more licenses arrives, again, we can also still build additional H20 and ship more as well.
NVIDIA builds very different things than ASICs. But let's talk about ASICs first. A lot of projects are started. Many startup companies are created. Very few products go into production. And the reason for that is it's really hard. Accelerated computing is unlike general purpose computing. You don't write software and just compile it into a processor. Accelerated computing is a full stack co-design problem. And AI factories in the last several years has become so much more complex because of the scale of the problems have grown so significantly. It's really the ultimate, the most extreme computer science problem the world's ever seen, obviously. And so the stack is complicated. The models are changing incredibly fast from generative based on autoregressive to generative based on diffusion to mixed models to multimodality. The number of different models that are coming out that are either derivatives of transformers or evolutions of transformers is just daunting. One of the advantages that we have is that NVIDIA is available in every cloud. We're available from every computer company. We're available from the cloud to on-prem to edge to robotics on the same programming model. And so it's sensible that every framework in the world supports NVIDIA. When you're building a new model architecture, releasing it on NVIDIA is most sensible. And so the diversity of our platform, both in the ability to evolve into any architecture, the fact that we're everywhere, and also we accelerate the entire pipeline. Everything from data processing to pre-training to post-training with reinforcement learning, all the way out to inference. And so when you build a data center with NVIDIA platform in it, the utility of it is best. The lifetime usefulness is much, much longer. And then I would just say that in addition to all of that, it is just a really extremely complex systems problem anymore. People talk about the chip itself. There's one ASIC, the GPU that many people talk about. But in order to build Blackwell, the platform, and Rubin, the platform, we had to build CPUs that connect fast memory, low extremely energy efficient memory for large KV caching necessary for agentic AI, to the GPU, to a super NIC, to a scale up switch we call NVLink, completely revolutionary when we're in our 5th generation now, to a scale out switch, whether it's quantum or Spectrum X Ethernet, to now scale across switches so that we can prepare for these AI super factories with multiple gigawatts of computing all connected together. We call that Spectrum XGS. We just announced that at Hot Chips this week. And so the complications, the complexity of everything that we do is really quite extraordinary. It's just done at a really, really extreme scale now. And then lastly, if I could just say one more thing, we're in every cloud for a good reason. Not only are we the most energy efficient, our perf per watt is the best of any computing platform. And in a world of power limited data centers, perf per watt drives directly to revenues. And you've heard me say before that in a lot of ways, the more you buy, the more you grow. And because our perf per dollar, the performance per dollar is so incredible, you also have extremely great margins. So the growth opportunity with NVIDIA's architecture and the gross margins opportunity with NVIDIA's architecture is absolutely the best. And so there's a lot of reasons why NVIDIA is chosen by every cloud and every startup and every computer company. We're really a holistic, full stack solution for AI factories.
Your next question comes from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about your 3 to 4 trillion in data center infrastructure spend by the end of the decade. Previously, you talked about something in the 1 billion range, which I believe was just for compute by 2028. If you take past comments, 3 to 4 trillion would imply maybe 2 billion plus in compute spend. And just wanted to know if that was right. And that's what you're seeing by the end of the decade. And wondering what you think your share will be of that. Your share right now of total infrastructure compute-wise is very high. So wanted to see, and also if there's any bottlenecks you're concerned about, like power, to get to the 3 to 4 trillion. Thanks a lot.
Yeah, thanks. As you know, the CapEx of just the top 4 hyperscalers has doubled in 2 years. As the AI revolution went into full steam, as the AI race is now on, the CapEx spend has doubled to $600 billion per year. There's 5 years between now and the end of the decade. And $600 billion only represents the top 4 hyperscalers. We still have the rest of the enterprise companies building on-prem. You have cloud service providers building around the world. United States represents about 60% of the world's compute, and over time, you would think that artificial intelligence would reflect GDP scale and growth, and would be of course accelerating GDP growth. And so our contribution to that is a large part of the AI infrastructure. Out of a gigawatt AI factory, which can go anywhere from 50 to plus or minus 10%, let's say 50 to 60 billion, we represent about 35 plus or minus of that, and 35 out of 50 or so $1 billion for a gigawatt data center. And of course, what you get for that is not a GPU. I think people, we're famous for building the GPU and inventing the GPU, but as you know, over the last decade, we've really transitioned to become an AI infrastructure company. It takes 6 chips just to build 6 different types of chips just to build a Rubin AI supercomputer, and just to scale that out, to a gigawatt, you have hundreds of thousands of GPU compute nodes and a whole bunch of racks. And so we're really an AI infrastructure company, and we're hoping to continue to contribute to growing this industry, making AI more useful, and then very importantly, driving the performance per watt, because the world, as you mentioned, limiters, it will always likely be power limitations or AI infrastructure or AI building limitations. And so we need to squeeze as much out of that factory as possible. NVIDIA's performance per unit of energy used drives the revenue growth of that factory. It directly translates. If you have a 100 megawatt factory, per 100 megawatt drives your revenues. It's tokens per 100 megawatts of factory. In our case, also, the performance per dollar spent is so high that your gross margins are also the best. But anyhow, these are the limiters going forward, and $3 to $4 trillion is fairly sensible for the next 5 years.
Next question comes from Joe Moore of Morgan Stanley. Your line is open.
Great. Thank you. Congratulations on reopening the China opportunity. Can you talk about the long-term prospects there? You've talked about, I think, half of the AI software world being there. How much can NVIDIA grow in that business? And, how important is it that you get the Blackwell architecture ultimately licensed there?
The China market, I've estimated to be about $50 billion of opportunity for us this year. If we were able to address it with competitive products, and if it's $50 billion this year, you would expect it to grow, say 50% per year, as the rest of the world's AI market is growing as well. It is the second largest computing market in the world, and it is also the home of AI researchers. About 50% of the world's AI researchers are in China. The vast majority of the leading open source models are created in China. And so it's fairly important, I think, for the American technology companies to be able to address that market. And open source, as you know, is created in one country, but it's used all over the world. The open source models that have come out of China are really excellent. DeepSeek, of course, gained global notoriety. Q1 is excellent. Kimi is excellent. There's a whole bunch of new models that are coming out. They're multimodal. They're great language models, and it's really fueled the adoption of AI in enterprises around the world, because enterprises want to build their own custom proprietary software stacks. And so open source models really important for enterprise. It's really important for SaaS, who also would like to build proprietary systems. It has been really incredible for robotics around the world. And so open source is really important. And it's important that the American companies are able to address it. It's going to be a very large market. We're talking to the administration about the importance of American companies to be able to address the Chinese market. And as you know, H20 has been approved for companies that are not on the entities list, and many licenses have been approved. And so I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thank you for the question. I want to go back to the Spectrum XGS announcement this week, and thinking about the Ethernet product now pushing over 10 billion of annualized revenue. Justin, what is the opportunity set that you see for Spectrum XGS? Do we think about this as kind of the data center interconnect layer? Any thoughts on the sizing of this opportunity, within that Ethernet portfolio? Thank you.
We now offer three networking technologies. One is for scale up, one is for scale out, and one for scale across. Scale up is so that we could build the largest possible virtual GPU, the virtual compute node. NVLink is revolutionary. NVLink 72 is what made it possible for Blackwell to deliver such an extraordinary generational jump over Hopper's NVLink 8. At a time when we have long thinking models, agentic AI, reasoning systems, the NVLink basically amplifies the memory bandwidth, which is really critical for reasoning systems. And so NVLink 72 is fantastic. We then scale out with networking, which we have two. We have InfiniBand, which is unquestionably the lowest latency, the lowest jitter, the best scale out network. It does require more expertise in managing those networks. And for supercomputing, for the leading model makers, InfiniBand, Quantum InfiniBand is the unambiguous choice. If you were to benchmark an AI factory, the ones with InfiniBand are the best performance. For those who would like to use Ethernet, because their whole data center is built with Ethernet, we have a new type of Ethernet called Spectrum Ethernet. Spectrum Ethernet is not off the shelf. It has a whole bunch of new technologies designed for low latency and low jitter and congestion control. And it has the ability to come closer, much, much closer to InfiniBand than anything that's out there. And that's, we call that Spectrum X Ethernet. And then finally, we have Spectrum XGS, a gigascale for connecting multiple data centers, multiple AI factories into a super factory, a gigantic system. And you're gonna see that networking obviously is very important in AI factories. In fact, choosing the right networking, the performance, the throughput improvement, going from 65% to 85% or 90%, that kind of step up because of your networking capability effectively makes networking free. Choosing the right networking, you're basically paying, you'll get a return on it like you can't believe, because the AI factory, a gigawatt, as I mentioned before, could be $50 billion. And so the ability to improve the efficiency of that factory by tens of percents results in $10-20 billion worth of effective benefit. And so, the networking is a very important part of it. It's the reason why NVIDIA dedicates so much in networking. It's the reason why we purchased Mellanox 5.5 years ago. And Spectrum X, as we mentioned earlier, is now quite a sizable business, and it's only about 1.5 years old. So Spectrum X is a home run. All three of them are going to be fantastic. NVLink, scale up, Spectrum X and InfiniBand, scale out, and then Spectrum XGS for scale across.
Your next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. I have a more tactical question for Colette. So on the guide, you're up, over $7 billion. The vast bulk of that is going to be from data center. How do I think about apportioning that $7 billion out across Blackwell versus Hopper versus networking? I mean, it looks like Blackwell was probably $27 billion in the quarter, up from maybe 23 last quarter. Hopper's still $6 or $7 billion post the H20. Do you think the Hopper strength continues? Just how do I think about parsing that 7 billion out across those three different components?
Thanks, Stacy, for the question. First part of it, looking at our growth between Q2 and Q3, Blackwell is still going to be the lion's share of what we have in terms of data center. But keep in mind that helps both our compute side as well as it helps our networking side, because we are selling those significant systems that are incorporating the NVLink that Jensen just spoke about. Selling Hopper, we are still selling it. H100, H200s, we are. But again, they are HCX systems, and I still believe our Blackwell will be the lion's share of what we're doing on there. So we'll continue. We don't have any more specific details in terms of how we'll finish our quarter, but you should expect Blackwell again to be the driver of the growth.
Your next question comes from Jim Schneider of Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. You've been very clear about the reasoning model opportunity that you see, and you've also been relatively clear about the technical specs for Rubin, but maybe you could provide a little bit of context about how you view the Rubin product transition going forward. What incremental capability does that offer to customers? And would you say that Rubin is a bigger, smaller, or similar step up in terms of performance for a capability perspective relative to what we saw with Blackwell? Thank you.
Yeah, thanks. Rubin, we're on an annual cycle, and the reason why we're on an annual cycle is because we can do so to accelerate the cost reduction and maximize the revenue generation for our customers. When we increase the perf per watt, the token generation per amount of usage of energy, we are effectively driving the revenues of our customers. The perf per watt of Blackwell will be, for reasoning systems, an order of magnitude higher than Hopper. And so for the same amount of energy, and everybody's data center is energy limited by definition, for any data center using Blackwell, you'll be able to maximize your revenues compared to anything we've done in the past, compared to anything in the world today. And because the perf per dollar, the performance is so good that the perf per dollar invested in the capital would also allow you to improve your gross margins. To the extent that we have great ideas for every single generation, we could improve the revenue generation, improve the AI capability, improve the margins of our customers by releasing new architectures. And so we advise our partners, our customers to pace themselves and to build these data centers on an annual rhythm. Rubin is going to have a whole bunch of new ideas. I paused for a second because, I've got plenty of time between now and a year from now to tell you about all the breakthroughs that Rubin's going to bring. But Rubin has a lot of great ideas. I'm anxious to tell you, but I can't right now, and I'll save it for GTC to tell you more and more about it. But nonetheless, for the next year, we're ramping really hard into now Grace Blackwell GB200, and then now Blackwell Ultra GB300. We're ramping really hard into data centers. This year is obviously a record-breaking year. I expect next year to be a record-breaking year. And while we continue to increase the performance of AI capabilities as we race towards artificial superintelligence on the one hand, and continue to increase the revenue generation capabilities of our hyperscalers on the other hand.
Your final question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask you, just answered a question. You threw out a number. You said 50% CAGR for the AI market. So I'm wondering how much visibility that you have into next year. Is that kind of a reasonable bogey in terms of how much your data center revenue should grow next year? I would think you'll grow at least in line with that CAGR. And maybe are there any puts and takes to that? Thanks.
Well, I think that the best way to look at it is we have reasonable forecasts from our large customers for next year, a very, very significant forecast. And we still have a lot of businesses that we're still winning and a lot of startups that are still being created. Don't forget that the number of startups for AI native startups was 100 billion was funded last year. This year, the year's not even over yet. It's 180 billion funded. If you look at AI native, the top AI native startups that are generating revenues, last year was $2 billion. This year is $20 billion. Next year, being 10 times higher than this year is not inconceivable. And the open source models is now opening up large enterprises, SaaS companies, industrial companies, robotics companies to now join the AI revolution, another source of growth. And whether it's AI natives or enterprise SaaS or industrial AI or startups, we're just seeing just enormous amount of interest in AI and demand for AI. Right now, the buzz is, I'm sure all of you know about the buzz out there. The buzz is everything sold out. H100 sold out. H200s are sold out. Large CSPs are coming out renting capacity from other CSPs. And so the AI native startups are really scrambling to get capacity so that they could train their reasoning models. And so the demand is really, really high. But the long-term outlook between where we are today, CapEx has doubled in 2 years. It is now running about $600 billion a year just in the large hyperscalers. For us to grow into that $600 billion a year, representing a significant part of that CapEx, isn't unreasonable. And so I think the next several years, surely through the decade, we see just really fast growing, really significant growth opportunities ahead. Let me conclude with this. Blackwell is the next generation AI platform the world's been waiting for. It delivers an exceptional generational leap. NVIDIA's NVLink 72 rack scale computing is revolutionary, arriving just in time as reasoning AI models drive order of magnitude increases in training and inference performance requirement. Blackwell Ultra is ramping at full speed and the demand is extraordinary. Our next platform, Rubin, is already in fab. We have 6 new chips that represents the Rubin platform. They've all taped out to TSMC. Rubin will be our 3rd generation NVLink rack scale AI supercomputer. And so we expect to have a much more mature and fully scaled up supply chain. Blackwell and Rubin AI factory platforms will be scaling into the $3 to $4 trillion global AI factory build out through the end of the decade. Customers are building ever greater scale AI factories from thousands of Hopper GPUs in tens of megawatt data centers to now hundreds of thousands of Blackwells in 100 megawatt facilities. And soon we'll be building millions of Rubin GPU platforms powering multi-gigawatt, multi-site AI super factories. With each generation, demand only grows. One-shot chatbots have evolved into reasoning agentic AI that research, plan, and use tools, driving orders of magnitude jump in compute for both training and inference. Agentic AI is reaching maturity, and has opened the enterprise market to build domain and company-specific AI agents for enterprise workflows, products, and services. The age of physical AI has arrived, unlocking entirely new industries in robotics, industrial automation. Every industrial company will need to build two factories, one to build the machines and another to build their robotic AI. This quarter, NVIDIA reached record revenues and an extraordinary milestone in our journey. The opportunity ahead is immense. A new industrial revolution has started. The AI race is on. Thanks for joining us today, and I'll look forward to addressing you next week, next earnings call. Thank you.
All right, everyone. So that is it for NVIDIA. Again, got a little bit, obviously, too technical. The roadmap for Rubin is on the way. It's already in fab with a lot of contracts with TSMC to get that out. And yeah, U.S. government taking up to 15% of the China revenue. And whenever that starts, it's going to spin up around $2 to $5 billion per quarter of a runway. That's, again, expectations are going to be closer to $60 billion for the next quarter, representing about a 60 to 70% growth on a year-over-year basis. I think the numbers are strong, guidance is strong, margins are strong, profitability, future demand and interest for AI, everything getting sold out. All in all, I think it's a 9 out of a 10 quarter. And the conference call, again, there wasn't really too many technical questions or guidance questions, but all in all, I think it's a pretty solid earnings. And I wouldn't be surprised to see actually NVIDIA getting bought up here fairly soon in the coming days here, given that they exceeded expectations, and I think it was on par with what everyone was expecting, basically. So all in all, I'm kind of pleased. I'm going to keep my position intact. We'll alert everybody if I do decide to roll my calls or close them out early. Link's going to be down below. Thank you so much for joining in. It's pretty late over here, past 1 in the morning. Actually 2 in the morning, so I'm going to get some sleep here. So thank you so much for joining. Make sure that you drop a like, subscribe to the channel. Link's going to be down below if you're interested in joining us in our MoneyVest community as well. The 30% annual discount does expire at the end of this month, so there's 3 more days left if you're interested in joining us with that discount. Happy investing.